The SEC just dropped a bombshell. The chairman says most crypto tokens are not securities.
Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's kick things off with a look at the market, and it is looking green. The entire crypto market cap is up a healthy 2.12% in the last 24 hours, pushing us to a whopping $4.0552 trillion. That's a number you love to say. Bitcoin is leading the charge, climbing 2.3% to hit $114,105. And not to be outdone, Ethereum is right there with it, up 2.4% at $4,416. But the real superstars of the day? Layer 2 projects. They've collectively jumped a massive 6%, with projects like MNT having a fantastic run and the new Linea token making a splash. So what's fueling this good mood? It looks like we can thank some softer than expected U.S. August PPI inflation data. When that kind of data comes in cool, it calms nerves about rate hikes, which is good for stocks, and as we see today, it's great for crypto. Risk appetite is back on the menu. Now for our first big story, and it's a wild one over in the Ethereum ecosystem, we've seen a jaw-dropping surge in unstaking requests. Get this, as of September 10th, over 2.04 million ETH are now in the queue waiting to be withdrawn. That is a massive spike, and it's pushed the waiting time to over 45 days. So what happened? Did everyone suddenly lose faith? No, the trigger was a security incident. Swissborg's staking partner, a firm called Kiln, suffered a hack. In response, as a safety measure, they decided to initiate a full withdrawal of about 1.6 million ETH from their validators. It's a classic better safe than sorry move on a gigantic scale. Now, the big question is whether this will create huge selling pressure. The market consensus for now seems to be probably not. The thinking is that most of this ETH will be restaked once the security issues are sorted out. As a side note, that same Kiln API breach also hit Swissborg's SoLe Earn wallet, leading to a painful $41.5 million loss. A tough reminder that security is everything in this space. Okay, from security scares to some potentially game-changing regulatory news, this is the kind of update I get genuinely excited about. SEC Chairman Paul Adkins gives more details of Project Crypto at a roundtable in Paris. And folks, these details are music to my ears. The goal is to modernize U.S. securities rules specifically for on-chain markets. Adkins pledged an end to the policy by enforcement era that has kept everyone on edge. He said they want to provide clear, predictable rules. And then he dropped this bombshell. He stated that most crypto tokens are not securities. Let me repeat that. The SEC chairman said most crypto tokens are not securities. This is a monumental shift in tone. The project also envisions a future with super app trading platforms where trading, lending, and staking can all live under one clear regulatory roof. This is the clarity the industry has been begging for. It's about building a real, sustainable foundation for the future of finance. Now, let's get the popcorn out for some crypto political drama. A very public feud has broken out between Brian Quintenz, the nominee for CFTC chair, and a policy chief at A16Z, and the Gemini founders, Tyler and Cameron Winklevoss. Quintenz actually shared screenshots of Signal chats where the Winklevoss twins were apparently pressuring him to prioritize Gemini's regulatory issues. They even threatened to take the matter to President Trump if he didn't play ball. Following this public leak, the White House has reportedly asked the Senate to withdraw Quintenz's confirmation vote. This all comes as Gemini is gearing up for its IPO on NASDAQ, which just goes to show the intense political maneuvering happening behind the scenes. It's like a season of House of Cards, but with crypto. Finally, let's look at a fascinating data trend. While the meme coin frenzy has cooled down a bit, the number of unique meme coin addresses is down 90% from its December peak. Prediction markets are absolutely booming. Data shows that these markets now account for 38% of the total trading volume on Solana meme coins. That's a huge slice of the pie. This suggests traders are shifting their focus from just pure speculation to pricing real-world outcomes. And it's not just a small trend. The founder of Interactive Brokers, Thomas Peterffy, has predicted that prediction markets could one day rival the size of traditional stock markets. That is a future I am here for. That's a wrap for today's update. Catch you tomorrow, same time, same place. Cut through the chaos. Focus on what drives the crypto market. Stay on top of crypto research, all in one place, on SoSoValue.com.